Good day, greeters. My name is Lidiane LG. Welcome to our lesson for today. Today we'll be focusing on cash flow statement, but for the purpose of this lesson, we're only going to be focusing on the notes to the cash flow statement. So we've taken one of the activities from previous question papers. Here we are required to prepare the following notes, which is reconciliation between profit before taxation and cash generated from operations, 12 marks. Then we also look at ordinary share capital and prepare the cash flow statement for the year ended 31st August 2017. Something that is very important there is to show all calculations, and furthermore we are required to show workings in brackets, get the mark allocation there. Then, for the purpose of this lesson, we're only going to be focusing on the notes to the cash flow statement without complete notes to the financial statements. That means we're not going to be doing this one, this ordinary share capital note. We're not going to be doing that one, but the other ones we're going to be doing them. Okay? Right. As cash flow statement has got 5 notes, which is note number 1, reconciliation between profit before taxation and cash generated from operations. Note number 2, it is the net changes in cash and cash equivalents. Note number 3, it is the dividends paid. Note number 4, it is taxation paid. And then the last note, it is a tangible or fixed asset purchased or sold. So here you'll always be looking for one of the missing. It's either you'll be looking for purchased or you'll be looking for sold, of which we'll explain as we embark on the activity therefore. Alright, so cash flow or cash generated from operations, note number 1 there, which is profit before taxation. Then we'll have to go to the extract from the income statement. As you can see here, they've given us the income tax, and then they said income tax amounted to 672,000. That income tax is calculated to be 28% of the profit. But what we are looking for here, we are looking for profit before taxation. So therefore, let's look at how do we then calculate that. We're going to be saying 672,000 multiplied by 100 divided by 28, which is that one that we got from the extract here. Okay, very important. You are looking for before taxation. You are given taxation, not after that. Then the amount that you get there is going to be 2,400,000. Then you come to adjustment in respect of depreciation. Most of the time, these amounts are given in the extract, so there is no trade mesh there. You don't even have to worry about where you're going to get them. They are mostly given in the extract of the income statement, or you call it statement of comprehensive and other incomes. Okay, so it's gonna be cut and paste for those two amounts. Then when you work everything out, where you say profit before taxation plus depreciation plus interest expense, the full amount there is going to give you operating profit before changes in working capital, which is in this case it's 2,881,320. Okay, then you come to your changes in working capital. It's very important therefore to know the format as to what is entailed in the changes in working capital. We've got inventory there. Then let's check what happened to inventory. We get it in the statement of financial position there. Alright. Then the advice there is always to say the previous, which is P minus the current one. So the previous minus the current one, we're going to be taking 1,462,000 minus 1,094,000. Okay, that's what you are getting there. Previous minus current. So I always advise learners to say, as you get it, remember that under inventory you go to say P minus C, so that you don't forget that. Then the amount that you are getting there uh, it is a positive 368,000. Okay, now let's come to the issue of a decrease or an increase in inventory. Last year or the year before that, the value of stock that we had, it was 1,462,000. This year it is 1,094,000. So the question is, what happened to inventory? Inventory decreased because the value was at 1,400,000. Now it's at only 1 million. So it is a decrease in inventory, but an inflow in terms of cash. So we are receiving money there because it's cash flow statement. We think at the movement of cash. All right. Same applies with debtors. Debtors is going to be the previous minus the current year. And be careful then. Debtors are there in trade and other receivables. But check if you are not given any other information that is related to trade and other receivables, as well as trade and other payables. Why are we doing that? Under trade and other receivables, we are going to exclude uh, SARS income tax. Why? Because it is a separate account, or it has got its own note. Okay. Then under trade and other payables, we're going to exclude shareholders for dividends because we have got dividend note, which is note number 3, and also taxation, which is note number 4. So all those things must be excluded. Means we're only going to be focusing on trade debtors, income receivables, on the other side, trade creditors, and accrued income or deferred income or income received in advance. Apologies on that. Okay, so what do we do then? You take the previous one, which is 311,000 plus 12,680, and then you minus the current one, which is the amount that we are having there. Okay, so it's very important for us to consider that. Then the amount that we are getting, it is negative 24,610. As much as this amount is a minus, check what we say here. We are saying there's an increase in debtors, which is true. Last year, the debtors were around 323,680. But this year, the number of people that owe the business, it is at, or the amount that is owed by debtors this year, it is sitting at 348,509. That means there was an outflow of money there because these people have not yet paid us. But in terms of creditors, then we say current minus the previous. Note the difference. The first two is PC, TC, and then the last one is what? It's CT there. Okay. Note you exclude shareholders for dividends and you also exclude what? SARS income tax there. Okay. Also exclude SARS income tax. Then you add those amounts there. Then what are we getting? We are getting an outflow or a negative 561,370. It is true as well. This year, we are owing our creditors 468,630, while last year we owed them at around 1,030,000. So we paid them this year. That shows an outflow. Then what do you then do for you to get changes in working capital? You're going to say 368,000 minus, you take the sign as it is, 24,610 minus 561,470. Definitely it's going to give you a negative amount there, which is an outflow of cash in terms of changes in capital. Then therefore you say 2,881,220 minus 217,980. It will give you the amount which is cash generated from purchase, which will be transferred to the cash flow statement as it is. Okay, thank you so much. Then in our next video, we'll be exploring